right now.
Okay. So, hello everyone. I can see many people around here. Okay. So, I am Aayush Somani. Let me introduce myself. I have been into practice from like past 8 years, and I have been dealing into income tax, GST, corporate and allied laws from past 8 years. Post that, I was into working with many multinational firms. I have practiced in Mumbai, Pune, Delhi, and finally landed here in Indore. Nova has given me this opportunity to talk about certain aspects of tax planning with all of you here today. So I'll be sharing the knowledge that I have accumulated over these years, and I'll tried my best to summarize them and bring out the best of the gist for you all here. So this is a guided tour of tax planning for all of you, made easy. So we can walk through this presentation part by part, and you can side by side drop me these queries if you have any in the chat box. We'll address them all together. Okay, so let's begin. Tax planning for salaried individuals. And the most important aspect of tax planning is taking into consideration the past events, the past transactions that you have already taken into account. So what happens is no base of tax cannot happen without looking into the past, all the past transactions, all the past history that you have already done. It is in the Gita itself that what you should reap is that what you have sowed. So the transactions of the past in income tax, there's a terminology called previous year. Now, the previous year is as such because the assessment year, in the year in which you are being assessed, totally depends on the transactions that you have done in the previous year. So the tax planning part comes back to the previous year, where you have to take into account all those transactions, like investing in many other policies, investing in mutual funds, investing in shares, dividends, capital gains, apart from your salary income. Of course, salary income is something that you'll be getting from your respective employers. So these kind of transactions that are part and parcel apart from the salary structure are what needs to be taken into account for a good tax planning, because numerously I have seen many people failing at this stage only. They don't take into account the total transactions that they have incurred into. For, let's say, for example, that apart from being a salaried person, you are also into trading, let's say equity segment, or say debt segment, or you are employee who gets ESOPs. I think everyone, many of you must have a good idea about ESOPs as well. So these kind of transactions also play a very important role in the taxability, the total tax liability of an individual for an year. So those also need to be taken into account for. Let us see the basic forms. See, every recipe needs something to boil. These are the basic ingredients upon which the tax planning of an individual can be easily done. Like Form 16. I highly doubt there is anyone who could not remember or know this form, like Form 16. Salary slips. You need your salary slips for your tax planning. Obviously, like for the year tax planning for 22-23, for which we'll be filing the returns for 22-23 in July. Of course, you'll be filing your returns in July, coming July. So you'll need salary slips for 22-23. You'll need your previous year tax return, the tax return that you have already filed for the previous year, to take into account for all those transactions or all those incomes or expenses or those losses. I'm sorry, am I not audible here?
Audible.
We can hear you.
Okay.
Audible.
Yeah, you are audible.
I'm audible. Okay.
I'm audible.
Yes.
Yes, Aayush, please go ahead.
Returns like previous year's tax returns. Form 26A. I guess Form 26A is again a very common form that is being known to every one of you. Interest certificates from banks and FIIs. These are easily downloadable from the respective bank portals. Dividend certificates, generally these stockbrokers now provide you dividend certificates as to the dividend that you have earned. Even foreign companies in which you have stocks also provide you dividend certificates. Also, what is very important here again is investment certificates, LIC, PPF, your if you have children, then your education fees receipts, Kisan Vikas Patra receipts, Sukanya Samriddhi receipts. These get you deductions. These get you deductions. So these are very important here again. These are some things that you have to submit to the company before a deadline. Each company has a different deadline of their own system as to where you upload these documents for them to give you respective deductions. We have already, we know that now comes the next HRA. HRA is the bone of contention for many people. Most of you would have gone or switched into work from home pattern. So there is a very big plethora of questions coming to my way that, sir, I have shifted to my hometown. I still get HRA. Is it taxable, or how can I get the best out of it and make it not taxable again? This is the very big question and a very big burning question in the times of work from home. Again, I have mentioned there, trading, mutual fund, commodity, ESOP, FNO, all the transactions that you have entered into, the broker will provide you with a capital gain statement. When you purchase shares and then you sell them after holding them for a certain period of time, you might hold them, you might speculate them, you might sell them as and when on delivery basis, you might enter into a hedge contract, whatsoever it be. Depending on the transaction that you have taken into account for, your taxability is being adjudged in the respective heads of income. I don't think if this is a 2.0 version of income tax, so I am taking a base presumption of many of you having a basic knowledge of what kind of income do you earn. Very fastly, I'll say there is a rental income apart from your salary income. Of course, there is rental income. There are business and profession income. There is capital gain income, and then there are other incomes. Other incomes are miscellaneous incomes, basically, which other incomes are other incomes are basically miscellaneous incomes like interest, dividend, and all. A very big question comes to the mind of an employee as to what to declare and what not to declare to the company, of course. When faced with the question, I have seen many people going through this dilemma. Should I declare the entire income as I earn to my company? Will it be beneficial for me or the company? Will the company know all my accounts? Will the company know where am I earning from? Will the company know, do I have any other source of income that I am to earn about? So these are the things that are being adjudged by many people. Here, I would like to request all of you that you have to declare all those incomes which, by the way, you are going to earn. Like, for example, we'll consider interest income. Interest income, by far and large, is the most important aspect here, because many people don't declare only their interest income, which, by the way, comes directly to the auto-populated figures in the ITR. If any one of you would have filed an ITR by automatic function on the portal, they would have a pretty good assessment as to that all these interest incomes, dividend incomes, now they auto-populate on the portal. So there is no escaping such incomes. Many people believe that there is a possibility that either we might not declare, they will not get any idea. Now the government is not government 1.0 anymore. The government has also switched to 2.0 version. So they are also taking AI as a guided, they also take help from AI, and then there are many auto-populated figures that directly come to your return. So many a time what happens is, people don't declare much income due to higher TDS deductions. there is a stigma among people as to they'll be subjected to higher rate of TDS or higher TDS deductions, thereby decreasing their overall in-hand salary income. So that's why they hinder from declaring much income. Again, then there are certain people who might be very tempted to declare many more deductions in the say like fake receipts, fake bogus claim of rent. These are all policies by certain individuals who try and act over smart from the system, but the system has fish hooks everywhere, and it will anyways catch those people who will try and escape the loopholes from the system. So please try and avoid that. Always declare what is correct, what is true, and what is to your knowledge. Don't try and declare any other things going roundabout from the pole. Don't do anything like that. Always declare what is true and correct. See, we should know a basic difference among allowances, exemptions, and deductions. What are allowances? Allowances are those things which the company bestows upon you, like the perquisites. The allowances, basic example, house rent allowance. It is a part of your salary. It is a part of your salary, and it will come to you when, oh, I'm sorry. Yes, allowances are a part of your salary, which will come to you eventually by the company itself. They are mostly declared in form number 16 by the company only, and they are form a part of your CTC. To claim an exemption of those allowances, see, you claim an exemption, you claim a deduction. Allowances are to be made exempt to make them tax-free. When they become exempt, like let's say, for example, HRA again, you get, let's say, 1,20,000 rupees as an HRA element of your salary. Up from that, let's say the company says 96,000 is exempt. So that 96,000 is directly deducted from your total income, making 96,000 tax-free for you in essence, because that 96,000 will go on to deduct from your entire gross salary. Again, apart from these two things, we also have deductions. What are deductions? The best way somebody told me to remember and memorize what deductions are, they are like discounts. They are discounts of the total from the total income. On a purchase of so and so amount, you will get a deduction of so and so amount. That are what deductions are. Here we can understand deductions by very quickly looking at the very big example from, like, for example, ATC, insurance of term, life insurance, ULIPs, etc., and ATD, medical insurance. Here Nova helps you to get the best insurance of term, insurance of ULIP, and medical insurance. Nova is into working for, I have been a spectator to it myself, that Nova has done a lot of research in medical insurance. They get you the best medical insurance possible and the term insurance, so that you can decide for where you have to go, because these insurance are a subject matter of a professional handling. You cannot go about searching on the internet about the best, what is best for you. You cannot assess as to your own situation. You give these professionals a chance and they'll get you the best deal out of the market. That is how things happen. See, we'll quickly say about some salary structures which I have presented here. See, I have made it so that the gross salary is 7 lakh for all the cases, but the components of salary are different for every case. Here we can see that, like, say, for example, for person A, HRA element is 1,24,000. Okay. And he also gets 56,000, being he's a non-metro person. So he might get a less deduction of HRA allowance. HRA totally depends on 3 factors. Whether you live in a metro or not, that gives you 50% or 40%. You can always search that formula on Google. The formula is there. And then 10% of your basic DA and your 10% of basic salary. These are the 3 elements that decide HRA exemption for a person. Even you get a house loan. If you have a house loan, generally, if you go to 2 tier, 3 tier cities, what they'll suggest you is that the best way to avoid taxation for any salaried individual is to take a house loan, because there are very less gully, you can say that as a word as gullies, there are very less opportunities for a person of a salaried class to get good exemptions or deductions. House loan being one of the prime most importance, because house loan interest, as you can see here, house loan interest gives you a direct deduction of 2 lakh rupees. I have made it 1 lakh rupees in this example because taking just example like figures, the maximum limit of interest that you pay on house loan is 2 lakh rupees. 2 lakh rupees of interest is tax deductible. It will be deducted from your total salary. That's giving you, let's say if you are in a 30% bracket, it will give you a direct benefit of 60,000 rupees as such. Then you have standard deduction. Usually what happened previous to these new tax regimes was that you had n number of allowances that a company provided to you. Then you claimed n number of allowances based on the amount of reimbursement that you have claimed from the company. When those reimbursements were passed by the company and accepted by the company, then you got allowances as exempt. But what the government did, what government gave you a standard deduction. Government gave us a standard deduction of rupees 50,000. Being a standard deduction, it does not work on a basis of case to case basis. Everyone has been given the standard deduction, and standard deduction from the salary is per se. It will be given without even you acknowledging it. Then again, after calculating for standard deductions, allowances that are exempt, other deductions like house loan interest, comes chapter 6A deductions. These chapter 6A deductions like ATC, ATD, ATG and ATGG. I have mentioned specifically here ATGG. You can come to case number B. Case number B, the guy does not get a HRA. If he does not get an HRA, but he still lives in a rental house, is it possible for him to get a deduction? Yes, it is possible for him to get a deduction of the rent that he is paying. That is 50, it is maximum of 60,000. So a guy who does not live in his own house can also claim a deduction of the rent that he is paying under section 80GG. But the only condition is that he should not be receiving HRA as a part of his salary structure. Again, we can come to, yes, the maximum limit of ATC is 1,50,000 rupees only. That is the maximum limit. We can come to say, person C. Person C gets a lot of amount as an HRA, but too much amount as an HRA also doesn't count, because HRA is subject to certain limits and it will be governed by those limits. That's why even after getting too much amount of HRA, like 2,40,000 in this case, the person is not getting a proportionate amount of deduction from his salary. That is only like 1,25,000. That is just the half of it. No proportion of like 70-80% deduction, 90% deduction he won't be getting. That's why it increases his overall salary. Again, in the last one, there we can see the person has got 80,000 rupees as his HRA deduction. Here, the person is claiming 80,000 per se as it entirely over and above. He pays a rent of, let's say, 1,20,000. So he's claiming more or 100% HRA deduction. Well, I have just made it here so as to present the view that 100% HRA deduction is not possible any case. This is not possible. You cannot claim the entire amount of salary until unless it is below rupees 1 lakh. That is so. Oh, one more thing which I would like to pass here is that till an amount of rupees 1 lakh, you don't have to give the PAN number and the details of your landlord. After that, you have to provide the PAN number and details of the landlord to your company. The company would upload their PAN numbers and make it as such that giving you the deduction, they'll point and then map the PAN number of the person, that this person receives rent from this employee. Now you can go and catch that person who has been named a landlord and give this person a rental income, because we have already declared that we pay more than rupees 1 lakh rupees rent to this person, X person. So the income tax department will issue a notice to that person X that a certain employee has asked by his company, upon being asked by his company, presented your name and PAN number to the company and allocated rupees 1 lakh of rupees rent and claimed an HRA deduction as well. Now the income tax department will catch that person X again, making 1 lakh rupees as his rental income. Again, coming back to the topic of many fixed hooks that the government has now planned for taxpayers, so they don't get out of the line. Many questions come to me regarding the old scheme and the new scheme. There are only two basic differences for old scheme and new scheme. Old scheme of taxation are for those people who earn below 15 lakhs and they claim a lot of deductions. This is beneficial for only those people who have deductions and who want to claim those deductions and allowances also, because in old scheme only there is a possibility of claiming such deductions. In new scheme, there are no deductions. Straight away, straight rate of taxation. Although in the new scheme, they have staggered stage-wise rate increase in the overall taxation. However, this does not work for those people whose income is below 15 lakhs. And here, if you have lots of deductions, let's say if your company deducts good amount of PF from your salary, you have good investments in LIC, you have good investments in mutual funds that belong to the tax-free category, you are claiming all the exemptions, 1,50,000, 50,000 in ATD everywhere. Again, 2 lakh rupees of house loan interest as well. Then you will get a benefit in old scheme, not the new scheme. New scheme is like, sir, I don't want to claim any deductions. My income is so and so. Give me a staggered amount of rate of taxation, slab of taxation to say, so that I may claim such tax on a lowered rate of tax. That is the benefit that government is throwing at us. Now, again, in the budget 2023, the government brought about some changes. They brought some changes to the new scheme. The old scheme is there, but the government somehow wants to promote these schemes, like they don't want you to claim those deduction and exemptions because of the malpractice to say. For there were many people who used to claim wrong and wrongly claim these deductions. So it led to unnecessary litigation, notices. I don't think many of you might have received any kind of notices. I have received back from past 2 years. I'm receiving such notices upon which I have to file replies to the government. So the government is in no mood now more to provide these deductions and exemptions. It seems so, but they have kept the old scheme as of yet. They have devised a way, like they have given a option of increasing the overall tax limit to 3 lakh rupees and then giving you the basis for rate-wise taxation in these slabs. These slabs are there in the screen for you to see. The only difference that they made here was they'd increase the base limit to from 2.5 lakhs to 3 lakhs. Thereby, again, staggering this 5%, 10%, 15%, 20%, small brackets. Here, the government has made it so that these small brackets, 3 to 6, 6 to 9, 9 to 12, 3 lakhs rupees bracket, and thereby you have to pay taxes in these new brackets if you go into the new scheme. The government has also made us such so that 50,000 standard deduction will be provided irrespective of the scheme that you choose. Again, that is a welcome step by the government, giving that 50,000 was just an assumption of the government, and they have carried over that assumption to the new scheme as well. Now the government has also made so that the new scheme is the by default scheme. It is the by default, and you have to opt the old scheme if you are heavily invested into the old scheme options, ATC, ATD, and you still can compare. There are comparison tools available on the income tax portal as well as on various sites, whereby you can punch in your income figures and on an estimated basis, and then by that you can get along a good assessment as to where you are filing your income, and that is being beneficial to you. Again, I would suggest here, if your income is still below 15 lakhs, if your income is still below 15 lakhs, then you are heavily invested in ATC, ATD, or any other for that matter, like ATG. So you'd get a benefit in the old scheme and not in the new scheme. It is tried and tested. See, tax planning is like that age-old adage that used to say, do not put all your eggs in the same basket. How does that work here? We'll look upon this by looking at the investment structure. This line, this quotation has been many a times quoted for the investments that a person makes. See, you have to hedge yourselves, you have to have an equity outlook as well. If you are risk aversive, then you can go to debt and such equity that does not move much. These kind of equity outlook, or let's say debt outlook, risk aversive outlooks being suggested for investment plannings. How does that work for tax planning? Yes, it works for tax planning as well. We'll see how. Because there are many deductions in ATC. To name a few, I have made it in the slide as such, like insurance policies. See, if you are a person who does not believe in insurance, for a person, I must say a person should believe in insurance, given the fact that insurance is the lifeline of these days. For a person to have a good amount of term insurance, when we used to study, as our teachers used to tell us, I still remember that for a person who is a sole breadwinner of his or her own house should have at least 1 to 1.5 crores as a term insurance. If he is the sole breadwinner, that should be the realizable amount. 1.1 to 1.5 crores 10 years back, they used to say. Now 10 years cost inflation index, you could easily manipulate the figure up to somewhere around 2.5 crores for a person of this day and for today's life standards. This is what insurance is all about, to have a security. That's why investment planning plays a very important role here. These kind of deductions like employees PF, GPF, PPF. Yes, again, I'll take PPF separately. Employee PF and GPF are such deductions will the company will already provide you. You don't have to look much into about it, because the company then is any which way is going to provide you with that only. But for PPF, NSC, KVP, tax saving FDR, these are triple E category items. I'm sorry, tax saving FDR is not a triple E category. What is triple E category? When you invest in that, it is exempt. Like, let's say, we'll take an example of PPF here. PPF, for me, I'll suggest everyone, PPF is something that is the safe haven of all the investment, safest haven of all the investments. See, when you deposit in PPF, the amount that you deposit is deductible from your overall taxability. So that gets deducted from your overall tax liability. The interest that you earn from PPF, around about 7.3 to 7.4% yearly interest is being earned on PPF deposits. That is again exempt. So the PPF interest every year is exempt here again. Now, when you take out the money from the PPF after certain lock-in period that is there, the amount that you take out is again tax exempt. So exempt on investment, exempt on income, and exempt on taking that amount again back. These kinds of investments are called triple E investments. For people of age group 25 to 35, PPF is a very good investment opportunity. That is my personal belief, because given the fact that there is a 15-year lock-in period in PPF, a person who invests at the age of, let's say, 25, if you 30, if you start investing in PPF, you'll invest in PPF for like 40 till the age of 45. You have already, by, let's say, if you invest 1,50,000 in PPF religiously for every year, 15 lakh rupees, 1,50,000 for 15 years, 22,50,000 in PPF. given the rate of 7.4%, it will go anywhere around more than 40 to 45 lakhs rupees are there saved with you. A similar situation is with Sukanya Samriddhi scheme as well. Sukanya Samriddhi scheme is for those people who have a baby girl with them. Those people can easily go to the post offices and invest their amount for the betterment of their girl child. The scheme works the same way as PPF. There is a lock-in period again here till the age of till when the girl gets to the age of 18, that when she becomes a major. Housing loan repayment is again, when you take the house loan, you get a benefit of rupees 2 lakh as per the interest norms. Again, when you repay that house loan, let's say you don't have any insurance or anything like that, but when you repay that house loan, the principal amount that you repaid back is again tax deductible here. The overall limit for that 80, this section 80C is 1,50,000. So irrespective of the amount that you submit here, let's say you submit rupees 2 lakhs in insurance, 1 lakh in PPF, 2,50,000 in mutual funds, 1 lakh in Sukanya Samriddhi, and 1 lakh of housing loan repayment. But still you will get a 1 lakh deduction of rupees 1,50,000 only. That's why it is very necessary to look into the help from professionals like Nova to have a good investment structure in insurance. Term insurance is the need of the hour. And if good term insurance policies are available for you, then it will be very beneficial for you to decide the very basic. This ATC is the very basic of tax planning investments. It will be very helpful for you to decide here. Again, a counterpart of this is 80D. Maximum people know about these two only, these two deductions. ATC is LIC, PPF, EPF, 80D is Mediclaim. Now what Mediclaim? Mediclaim premium for self and family, 25,000 premium for self and family, and if there is a senior citizen involved, for your parents as well, here you can invest, pardon me. If a senior citizen is involved, the overall limit for this goes to rupees 50,000. So 50,000 is the amount of deduction that you can claim here maximum, even for preventive health checkup. Let's say you don't have any kind of a policy. First and foremost, I'll urge every one of you, the medical insurance sector in India is very low as compared to what it is in abroad. We have many people who are not yet under the radar of medical insurance, but the COVID has taught us that medical insurance is also one of the need of the hour. Without proper medical insurance, an ample amount of claim at your disposal, many people won't survive much at hospital, and many people won't survive much and are at the mercy of the hospitals that they are being admitted into. Your medical insurance, government also recognizes this, and thereby they give you a deduction of rupees 50,000 for the amount of mediclaim. Imagine the amount of mediclaim in rupees 50,000 that you can get. I guess in rupees 4 to 5,000, you get a claim of about 2 to 3 lakhs. Imagine what you can get in 50,000. We can also cursorily go through these deductions of 80G. Many a times I've been faced with a situation of people coming to me and asking me that we want to deduct, we want these charity receipts from some NGOs just to transfer the amount and then get this deduction under 80G. See, I personally don't adhere to such practices, and I would deter anyone not to indulge in these practices, because the government is hitting hard on such organizations. And coming back to that, I'm sorry, I'm facing some kind of disturbance here.
Please go on.
Okay. The section of 80G gives you the deduction of 50% and 100% of the amount that you have so generously given to the charity work. Then comes section 80 TTA TTB, the savings interest that you earn on your account, the saving bank interest. That is one such thing that everybody neglects. See, the amount of your salary lying idle in a bank accounts do earns an income as well. That is your saving interest. The saving interest is the primary thing that you should declare to your company, being an other source of income as an interest income, because it is exempt to the tune of rupees just 10,000 rupees. Let's say if you're 30, if your age is 30 and you're earning some good stuff, and then you don't declare to your company the amount of interest that you're earning. Let's say you earn about 50,000-60,000 rupees as interest income only from your saving bank account. In your 30% tax bracket, only 10,000 rupees will get exempt, and rest of the 50,000 rupees you have to pay 30% tax on it. If the company registers your income and they only deduct the TDS, considering that income, it will give you a benefit. How? Because upon the date of filing of your return, when you come about assessing these incomes, these will come with an interest altogether by the government under section 234 A, B, and C. Thereby, when you have not got the company to deduct TDS on this income, now when you pay it via self-assessment, upon assessing this self, when you pay pay tax on this income on a self-assessment basis, the government will be charging you interest. So it is always better to declare these incomes on the very first hand to the company as well. There is a section called ATCCD. It is for the new pension scheme. Apart from the 1,50,000 that we have discussed under section ATC, the government also promotes NPS subscription. You have to invest in new pension scheme whereby rupees 50,000 are allowed as another amount of deduction over and above rupees 1,50,000, which is available at the disposal of the taxpayer. Then again, these are some kind of exemptions that a taxpayer can enjoy, and also these show the mindset of the government as to where they want to project or where they want people to invest. Let's say, for example, purchase of electric vehicle. The amount of interest that you pay for purchase of an electric vehicle is also tax deductible under section 80EE. Thereby, if you purchase EV vehicles, Tata Nexon EV, you purchase that car on loan, and the amount of interest that you pay on that, the EMI that you pay, the amount of interest you can declare that to your company and get a deduction under section 80EE. Again, if you, let's say, if you are still studying for a higher education, the education loan that you have taken for your own self, the interest that you pay on that education loan is also tax deductible. And there are specified diseases like Parkinson's disease, many cancerous diseases are there, critical illnesses to cover them. These critical illnesses curtail a lot of amount of expenses to be borne by individuals. If you bear such expenses, the government takes that into consideration as well, and then the government allows here for certain reliefs under section 80DDB as well. So if you are facing such issues in your family, or the taxpayer himself can claim such added benefits of such expenses already made by him through his own salary or income. Many people have asked me, can there be a shortcut of filing an ITR? Like, give us steps of filing an ITR our own self. So I have brought here a very synopsis kind of a look for filing an ITR. Very quickly, I'll tell you. For salaried individuals, either you are filing ITR 1 or ITR 2, depending on the incomes that you earn. Let's say if you earn more capital gain, then you have to go to ITR 2. You earn agriculture income as well, you have to go to ITR 2. These are the things that differentiate from ITR 1 and ITR 2. See, filing is very simple. I think anyone with a technical background can go about filing an ITR. It is just the nitty-gritties that the professionals come into play. Mostly, all the data are auto-populated when you log in through your portal. There is an income tax portal by Infosys. When you log into that portal, you get many details like interest income, dividend income, the transactions of mutual funds, equities, derivatives that you have undergone in the year. Let's say you have purchased an immovable property or sold one. These kind of informations are already available on the portal in form 16, in form 26AS, and your annual information statement. You should always look through all these three statements. These are the Holy Bible Gita, Quran of the income tax filing. You should definitely go through these three statements. Without these three statements, you cannot file your return. You can also plug in additional data, additional incomes like for the freelance income. Let's say you are also earning some freelance income and you want to declare that. So you can declare that income in other sources, or let's say if you are into some kind of side business, then you can file ITR 3 or ITR 4 and declare that business income as well. Always cross check and cross reference all your data, and you should always check your tax computation. Cross reference your data, like your bank is saying interest is rupees 55,000, the income tax portal is saying your interest is 65,000. So you might have missed some statement or something is there that you should reconcile. After reconciling all this data and computing all your incomes, final computation with all your deductions that have been claimed by you, then you either pay your tax or claim a refund for that tax. This is the small process. Now, there's a quick list of do's and don'ts for ITR filing as well, because with great power comes great responsibility. So do declare all your investments and deductions and incomes to the company timely. This is the very basic of the do's that a person should do. Many people come to me at the stage of ITR filing that we haven't declared this income, we haven't declared this deduction. What should we do now? Will we get the benefit of it? Will we be taxed more accordingly? What should we do? What I suggest from my experience here is that all the investments and or deductions or income should be primarily declared to the company whole and sole, because in the coming times it will be so that the government would not agree to any other deductions or any other income that would have that a person would self submit. Anything that has been submitted by the company would be considered final. You might compile all the data and reconcile it with the income tax portal. You should plan in advance with your investment strategies. Any kind of investment that you have to make are to be made in the previous year. After the year has been done, we are at the year end close. This is February. The next month is March. And after that, the year will be closed. Till March, you want to make investments for this year tax planning, you make it right now. This is the best time to make those investments. Do not take IT returns, investments, or claim receipts as a meek subject. These receipts are lifesavers. You don't seriously take them loosely. And do not wait till the last date for filing an ITR. Always be the first mover to have the first mover advantage. Do not try to evade taxes. One way or the other, the government will hack you. They'll get into your details one way or the other. There are many fish hooks by which the government scrutinizes us one way or the other. See, tax planning is always different from tax evasion. You should not evade tax. You should plan ahead and minimize your tax liability. It is not at our option. Nobody wants to pay taxes. Okay, nobody wants to. But it is smart. It is the smartness of a person to plan ahead and accordingly analyze those taxes. And it is not always to have a mindset of evasion of those taxes. I'll end this presentation by quoting my own self, that Google your questions, but don't expect real answers. You have professionals for that work. Thank you for your patient listening, and I'll be taking your questions.
Sure. Thank you, Ayush. I think we have a lot of questions. We'll take one by one.
Yes.
Okay, great. Okay. You can also, everyone can drop your questions in the chat. So I will come up to the questions once this. Okay. Okay. So for HRA, is the rental agreement mandatory?
Yes. For an HRA, if you have to claim HRA exemption, rent agreement is mandatory. Let's say you live with your father. You want to claim HRA. Now, how do you claim HRA? You have to make a rent agreement to your father at the very first stage. And then you have to submit that to your company. You even have to transfer some amounts from your bank account to your father as well. to show that to your company as well. That is the way it is done. Which is better
Okay.
regime, old or new for income above 13 lakhs? See, I again will say it is not a straitjacket answer, but if you are heavily invested already into deductions, it will be better for you below 15 lakhs. It will be better if you go to the old scheme.
Okay. I'll take up the next question. Can I claim interest on home loan even after the construction is completed while staying on a rented house in the same city, like Bangalore?
Okay. I am presuming that you live in a different house or the same house. I guess. See, what the provision says is you can have two houses as well. A place where you live is different, and the government gives you that release as well. Let's say you made a house, you purchased a flat. If that be, you purchased a flat, you paid interest, you paid your loan. After completion of that house, you don't get interest benefit. After the house is complete, you don't get an interest benefit upon that. You have to leave that.
Okay, got it. Okay, I will select few questions because there's a lot. Can we claim tax deduction on the second home loan if it's under construction?
If it is still under construction, you can claim.
Okay. TDS has been deducted from my salary for the past 1.5 years. However, I have not claimed it so far. What should I do to claim it?
For the past 1.5
One
years.
and a half years. Yeah.
See, for filing of returns for the year 21-22 has the last date has gone. It was till 31st of December. After that, only updated return can be filed for that year. So you can file your return for that years by ITRU is an option for you. You can file your returns. You can claim that exemption, although it entails certain amount of interest and penalty, but it is always advisable to declare your income that has already been declared by the company to the portal.
Okay. Can we gain tax benefit if we realize any stock in mutual fund income and invest in home building or purchase?
See, when you trade in mutual funds, when you trade in shares, equities, derivatives, you earn capital gain income. When you earn such substantial amount of capital gain income, let's say you bought Adani shares sometime back, not right now. Let's say you bought Adani shares and you got a hefty income upon selling them, let's say 10 to 15 lakhs. Now you want to invest that income into house. Yes, you can definitely invest that in your house, and you would get proper exemption of tax by investing that income into a house, residential house, of course. It's necessary to put bank interest amount and other income as well, as it got rejected when I have put it in ETTDA. No, it's very mandatory to declare your income there. Where should be NPS taken from? Post office. If two EMIs are paid, then see, deduction is available irrespective of the house. Okay, so you can claim interest as such, the entire amount of interest that you are paying. So you can also do it. Yes. Above 15 lakhs, it is almost the same. It is almost the same. Doesn't matter much which scheme. Again, If you have invested yourself a lot in ATC, ATD, then there would be a bit of shift, but there is not much different, like hardly 30,000 rupees. See, don't get into this like till 7 lakhs, there is no taxation. The government has declared it for the next previous year. All the declarations that the government has made would work from 23 onwards, not already. Okay. And considering the fact that already the current limit is just 5 lakhs, 5 lakhs, till 5 lakhs, you don't pay any taxes. I'd seriously request everyone, don't get into that jargons of like till 10 lakhs, you don't pay any income. This is how such kind of a salary structure is being made. These are all very skeptical, and these are all very fan-made kind of theories like things. Nothing substantial comes out of it. You have made LIC policy in February. How can I apply for tax exemption? Because I already submit tax book. You can always share that with your HR that I have this. They have the fourth quarter of taxation TDS to be filed. They'll definitely instill it. There is no specific reason for NPS to be taken from PO. It is just one of the ways that you can get NPS. There is no maximum cap of HRA claim per se, Gaurav, because HRA depends on a factor of 3 things. I've already told them. If you have not declared HRA, PPF and LTA, if I have not declared uploaded document to the company, declare it now. It is better to declare it to the company than to wait for filing your own self-assessment tax.
Yeah, sorry guys, I dropped in between. Ayush, you can take up the questions. I've lost the questions, so please
Yes,
continue.
I'm taking up questions here.
Thank you so
According
much.
to ATC, we can claim 150 for LIC and 150 for ELSS, or it's total 150. The overall limit is 150. Yeah, either you invest 1,50,000 in every other option available under LIC, it will be 150 only. Yes, for an under construction property, yes, you can, but basically you should have electricity bill running up and running there. Then you can. For last year, my salary was below 5 lakhs. From this year only, I'm getting a salary above 5 lakhs. Do I need to file ITR? See, it is always better to file an ITR. I'll get into this as well. It is always better to file an ITR. It gives you a good banking credit. Bank people think you are a good person. They give you a good investment history. It gives you a good income history as well. So I'd suggest, my friend, you should definitely file an ITR. Be it taxable or not, it will come upon self-assessment. Can a gift to parent be claimed for tax? No, gifts are not tax exempt. You cannot gift somebody your income and call it as an exemption. That is not possible. If you have submitted the POI to the company, so definitely, Sandeep sir, I'll tell you, you have to file your ITR, even if you have submitted everything to the company. You have to file your ITR because the company doesn't file your ITR. Company gives you form 16. You have to find your own ITR. No, you do not need to declare saving bank interest every month to the company portal, because you have to declare such incomes only once. I guess many companies ask for only one-time declaration for such incomes. Didn't get it about the electricity bill. Oh, that electricity bill is a case law. If you are, I just mentioned it because it came in a case law. The only thing is you can definitely claim exemption of interest on a under construction property, not an issue. If I sold my house and received half money this year and half money will be received in May 23, if the agreement sale happened 23, that income should be declared 23 or 24. Whenever the registry of that house happens for the sale of the house, only that time that income has to be declared. What is the overall ATD exemptions? Mediclaim of 25,000 for you, 25,000 for your parents. FD interest is to be declared in ITR. Yes, FD interest are to be declared in ITR. Those FD interest, if you get an FD interest in your form 26 years, definitely declare it. Do not forget to declare it. If the landlord is taking the rent in cash, can we claim HRA? No, the company will ask for receipts. Till 1 lakh, you don't have to name anyone. Till 1 lakh, you can claim. See, he might give you Aadhaar. If you quote the Aadhaar to company, the the government will make it so that they'll catch them in the basis of their Aadhaar. It is going to come up in some time. Get tax benefit 8.3 because I cannot submit the PAN card of the, like, if I will submit the rent receipt of 11K and with no PAN, no, at least I can get 8.3 right per month. Yes, you can. Till 1 lakh rupees, there is not issue. See, till 1 lakh rupees, there is no issue in claiming HRA without tax receipts. Also, that rent receipts also you can claim that. That is prerogative of the company if they give you. Yes, if you have a shared house loan between you and your spouse, it is good. It is always good if you have a shared house loan. You'll get deduction proportionately. Let's say you are the main applicant and your spouse is the co-applicant, 50%, then both of you will enjoy 50% deduction through interest. Yes, you can definitely make a rent agreement with your parents. No issue in that. By that rent agreement, just keep into notice that the amount of income that you will declare as rent to your parent will on the other hand go as an income of your parent. You have also declare income of your parent by that amount. I getting HRA 9K, if I declare 8K, is it okay? Yes, you might declare 8K, not an issue. Earnings from crypto are like heavily looked down upon by the government nowadays. All these digital transactions are now being monitored by the government. There is a TDS deduction of 30% on the amount of yes, Abhishek is right, 30% TDS is directly being deducted by them. Already the amount invested in crypto is like capital gains. I declare the income received as interest earned through saving account at the beginning of the financial year itself to the company. If you want to declare at the very initial levels, then you can always go on an estimated basis. Yes, anything else?
Yes. I guess we have covered most of the question. In case something is missed, please drop them. We can take it for next 2-3 minutes as well. Okay. For HRA exemption, does a parent have to be the homeowner?
If you are making agreement, so see, you cannot be the homeowner, okay? And somebody has to be the homeowner. Na? If you are making such a rent agreement with your parents, the parents have to be the homeowner. No personal loan deductions are possible. Yes, I can talk about LTA, but LTA is a subject matter that takes a lot of depth to understand. Yes.
Okay, I guess there's no more questions. Yeah. Thank you so much, guys, for joining the session. And I hope you have gotten a good idea of the tax planning and how you can do. We'll also try to arrange a further session for next month where you can join and learn more about tax or investment opportunities that can help you in the tax exemption. And for today, thank you so much, Aayush, for coming on the call and helping us with the entire tax planning thing, and also patiently answering the questions. And thank you everyone for joining as well. I have dropped 2 links. One was a personal insurance consultation. We have something called Nova X, where we do free consultation for everybody who's interested to get insurance, personal insurance, term life insurance, group health insurance, group family insurance, etc. You can consult with them. I'm also dropping the link for the gym subscription and the L&D as well. In case you will be interested, please add your interest, our team will contact you to get you know more details on that. Okay. Thank you so much. And also recording will be available on our YouTube channel after a few days. You can keep a watch at our YouTube channel. Okay. Thank you so much, everyone. Thank you so much for joining. Have a great day. Have a great weekend. Also, I'd like to take into note that we have a session on the Feb 15 on building interpersonal relationship. You can check out that as well. And I hope everybody will join the session as well. Thank you so much. Have a great day. Bye.